When you started BookMyForex, did you think that it would be one day front page news that it gets acquired by MakeMyTrip, 150 crore?
We were the first ones to bring online rate card where you could open a website and see, okay, the dollar is trading at this. We went through multiple pivots, but that business then did really well. Like at that time, we had almost touched 100 crore MRR.
How big was the team when you started?
When we started, we were like obviously 2-3 people, right? Just 3 co-founders.
And then when you scaled?
I think we scaled it to like 150-200 people.
Wow.
Yeah.
And you witnessed all of this?
Yeah, I witnessed all of this.
And I think you were like 23, 24?
Yeah, I was like 21 to 24, 25.
Wow.
And I started to meet people in the market.
What are 3 questions a founder should be prepared to answer when they are getting on a call with you?
One is, why you? So why are you the right person to win in this space? 2, why now? What's changed in this world over the last 2-3 months that makes your idea relevant today?
Right time.
Time. Right. Lastly, I would say how you would give me money back.
Got it.
So how do you 20x the company from here? Do you have a journey? Do you have a product roadmap? How will you get there?
What's a quote that you feel lost? Maybe it's a tough day. A quote that keeps you going.
So for me, it's opportunity meets the prepared mind.
Achha.
So you have to prepare your mind in a way, and opportunity will present itself, like always.
It'll come to you.
It'll come.
Hello and welcome to another episode of Damani Talks, and today we have a very interesting guest, someone with a very unique background and has an even more unique journey and is doing some very unique things with something which makes him go all in. So that getting sense, since 2012, Aditya has worn many hats, starting out as an entrepreneur, founder, and going on to build India's first Forex marketplace, which was acquired. And he's also dabbled in the startup business development at Amazon. He's done some debt. He's done some equity. He's been on the dark side and on the other side. So with his wealth of experience and passion for innovation, he's a force to be reckoned with, and he's doing some very interesting stuff. I'm looking forward to speaking to him. So please welcome Aditya Singh of All In Capital. Aditya, welcome.
Thank you, Anirudh, for having me today.
So Aditya, first question, how do you feel?
Feel great, yeah. It's been a good day. I woke up in the morning, did a 5-kilometer run.
Wow.
Came here. So fitness is a big part of my life. I wake up, I always do this, like one thing like related to fitness. So did that. That gets my day starting. And then, a 1-hour drive here.
Yeah. Maybe you should run here.
Yeah, that could have been.
But we're going to come back to that health part, right? I've
Yes.
got a whole bit of questions for you over there. But, starting out, Aditya, tell us a little bit about yourself, right? You were born in Delhi. You come from a banking family. I think many people may not even know people that have a single banking license. Your family had 2.
Yes.
So it's like 99.99% people do not understand what it is to be in a banking family.
Absolutely.
Could you tell us a little bit about that?
Absolutely. Very few people know this about me, but I was born in Delhi. I'm a 3rd-generation entrepreneur.
Achha.
My grandfather was the chairman of this bank called Punjab and Sindh Bank.
Wow.
That was nationalized. Then my father ran this bank called Bank of Punjab. So as a family, we are one of the only families that's got to have 2 banking licenses,
Correct.
right, in one lifetime. Did my schooling here in St. Columbus School. It's famous for Shah Rukh Khan going there.
Achha.
And then I went for my further studies to the US.
And you went to Northeastern?
Yes.
Right? Any reason why you chose that school?
At that time, no. I don't think I would say I didn't think through much. I would say 5 of my friends were going to Boston, and I was like, okay, let's go there. And
Right.
the only other option was maybe Delhi University.
Okay.
So it was literally didn't put too much thought into it. I was
And
like,
what
okay,
did you
let's
study
go.
Northeastern?
I was finance and accounting.
Finance and accounting. And then, mostly people when they graduate from there, they have that 1-year, work visa. People try to work there, or at least you're from Delhi. I'm from, even my friends from Bombay. At least,
Yeah.
rake in the dollars a little bit,
Yeah.
enjoy life before you come back. But you came straight back and started a very early member at BookMyForex.
Yeah.
Tell us about that.
So essentially, even when I was there for the 4-5 years, I was itching to come back. Like even
Achha.
in my first 1 or 2 years, I was like, no, I was more happy in India. So it was just something that came within that I always felt at home and always felt really comfortable in India, and especially in my city as Delhi, right? So just had my ecosystem here. So I always wanted to come back. So the moment that I graduated on Monday, and then Tuesday I took the flight back.
Really? Oh, wow. So you didn't even stay back for a bit?
No, I did not. And then it was just luck how this opportunity of BookMyForex presented itself. There was this guy, Mr. Sudarshan Motwani, right? He did Forex for about 40 odd years, right?
Wow.
And he had this idea of taking foreign exchange online. This is 2012, right? So I met him through my father, and I said, okay, what are you building? And he said, I want to get foreign exchange online, right? And this is 2012. There was no UPI.
Yeah.
RTGS
Banking
had
was-
just come in.
Yeah.
Right, NEFT, right? So funds would take 2 to 3 hours to transfer, right? There was no GPS. Like most of the delivery guys would have black and white phones.
Correct.
So I couldn't track where the Forex order is, what's happening. So at
RTGS
that
was
given
done on physical forms.
yeah, physical forms, exactly. And you had to, if I had to sell a foreign currency today, like you can buy a Neo card and you sign your A2
Yeah.
form online. Over there, I had to get it signed at the person's house. So operational challenges, very opaque market. Like if you would think how you bought foreign exchange, even today actually, you would have someone who's like your family friend or someone says, oh, just buy it from there. And he would say, okay, give me, what's the rate? He'll say 95. And you'll be, do better. And he'll be like, okay, 93. And you'll be like, okay, send it home.
Right.
And you have this informal sort of credit plus relationship with that person. And that's how you would buy foreign exchange. No one knew what the exact rate of Forex was.
That's true.
Right? No, if I asked you what the interbank rate today is, you educate, like today people are educated consumers. At that time, they didn't know. So we were the first ones to bring a online rate card where you could open a website and see, okay, the dollar is trading at this, or this is what you can get a Forex card,
Wow.
or this is what you can get a currency for, right? We went through multiple pivots, but that business then did really well. Like in 2013, 2014, I think, and at that time, India wasn't traveling. The whole boom had not happened. At that time, we had almost touched 100 crore MRR, 100% on the website.
Wow.
There was no Instagram at that point of
individuals
time.
buying, or was it also some businesses that?
Individuals, only B2C, 100% B2C. Yes, the problem with the business is the margins are only 1.5%.
Right.
So on the 100 crore, I'm only netting 1.5 crores.
I mean, that with such a big
But-
thing, I might have thought
but think
even
about it,
businesses are
like-
buying and selling with you.
Yeah, but how many businesses today in directly B2C actually do 100 crores a month?
Yeah, true.
Someone coming on the website. And that also in an era where trust was not, people were not used to spending online. Like people were barely used to, like
There's barely people
CODs were so
online.
high on Flipkart.
And
Right?
there was barely people online at that
Yeah,
time.
exactly. And then they were and imagine them coming and saying that, okay, I'm going to buy currency, it could be fake.
Correct.
People worried about their clothes being fake, right? Or cosmetics being fake online. But here I'm going and giving you 1 lakh rupees of currency delivered to your doorstep. First, you have to pay me 1 lakh. So my average order value was about 1 lakh, right? Because people are traveling. They'll take at least 40, 50,000.
Correct.
They have to first pay me. And then in they RTGS me.
We
They
should also
wait
be
3
clear
hours.
at that time, 1 lakh actually meant $2,000, I'm guessing.
Yeah,
two
they
and a half.
RTGS me 50K. Then they have to wait 3 hours for that money to hit my account. Then my delivery guy leaves and goes to the doorstep and delivers. So they had like a 5-hour window of anxiety that am I going to get my currency or not? It was like a big journey, and I realized like call center is a big part of it. So our call center did really well. And
So how were you reaching out to customers? How would they find out about you?
so at that point in time, we did a lot of SEO.
Acha.
So there was no Instagram. We couldn't figure out also CACs, right? So Google AdWords and SEO is something we spend a lot of time on. So if you would write best USD rate Delhi, the first one would be BookMyForex.
I see.
Even we were above Thomas Cook also in most cities in India, and that's how most of the people would come online. They would actually go and say what they like. They would go out and they'd be like, okay, what's the Forex rate? And they would type it, right? They were like, okay, best USD rate would be the best. USD rate Delhi. And mine would be the first one. Or I would buy those AdWords and I would get. That was one.
And you focused on that.
Yeah. We launched this campaign called Zero Forex Markup. So what we did was we said we were the first ones to do it in India, where when you had a Forex card, right, let's say the interbank rate is 60 to a dollar. It used to be around 60 then, now it's about 80. But 60, everyone would mark their card up. So you would go to a bank, they're like, okay, we'll give it at 61, we'll give it at 65, 62. I would say, okay, whatever you see online, I'll give it to you at that. So it was zero Forex markup.
Wow.
And we put like an Economics Time front page ad, Times of India front page ad. So that's what used to. Newspaper was our way of going.
Yeah.
Newspaper, radio, SEO, and like Google AdWords. That
So
was the four.
more traditional sources.
Yeah.
At least
at
initially.
least at that time.
Yeah.
See, 2013, 2014, there was not much out there.
And then how did you geographically scale this thing? You started in Delhi and then?
So interesting, I'll tell you. So we actually started as a brick and mortar. We
Acha.
said, okay, let's become like a Thomas Cook, right? So we had 3, 4, 5 branches. We had one in Delhi, one in Noida, one in Hyderabad, one in Bangalore. And we suddenly realized, we're like, okay, this is not scalable because of working capital, right? Like for me to tomorrow buy currency also, I need to have like every store, I need to have like 30, 40 lakhs of money that they can buy and then sell currency. If someone comes and sells me $2,000, right? I have that 2,000, now suddenly it drops in price. What do? I have to hold it for 2-3 days or offload it, or I need capital to hold that currency and hold. Let's say for me, my raw material was currency,
Correct,
which would be bought and sold, and that's money. So I need to have working capital. So we realized this will not scale. So we then pivoted to a marketplace where we said that let me go and tie up with all these small money changers everywhere, vetted money changers that I know them personally. I vetted them that everything is legit, nothing wrong will happen, and we would then pin code wise, you would just come in, you put in your pin code. I would map the currency rates around that area and show you the best rate. You would book it, it would go to the nearest money changer and he would come deliver the order. So we became a marketplace
I see.
for currency.
And how would the margins work then? Because you were at zero markup.
So that was for the Forex card.
Okay.
So Forex
For the
card,
ca- okay,
Forex
okay.
card. Forex card, you get MDR.
Okay.
So whenever on a credit card you spend money, there's
Correct.
2% that you pay to the merchant that flows back to the issuer.
That's how you made your money.
Yeah, so
Makes
we would
sense.
get 1.5% depending on the volumes you do. So that's the Forex card business. And
Correct.
then there was a currency note, which is hard cash. At that time, Forex cards had just been launched. So they were growing. Now everyone's used to Neo and Scapia and, like spending on cards. But at that time, everyone would love to take cash.
Correct.
The safest option when you're traveling abroad. I don't know what if this card doesn't work. What if the ATM doesn't work. Like I would get all these sorts of answers, right? So then we would go and we would map out the rates next to, like close to you, whoever we had tied up with. The order would go there and then they would come and deliver the currency to you.
Interesting.
So margins wise, I think you asked on margins, right? So I would let's say that what they would send me a rate in the morning. Let's say 60.25, right? I would put it on my website, everything marked up by let's say 30 paise.
Okay.
So they would all send in and upload their rates on my dashboard. I'd given them like each of them a dashboard. So they would log into BookMyForex.
Wow.
They would put in that I have 1000 USD at 62.5.
Huh.
That would automatically go to my website that this guy services these pin codes. Those pin codes, if someone puts in, it would go for 25% premium would get added to that currency.
62.5 plus
25 paise. So
25 paise,
62.75 would be the rate selling.
Got it. Wonderful. Wow. And then what was your role exactly?
So I would run ops for the business entirely. So making sure the rates are coming in, getting the right rates in the market, making sure the currency is being delivered on time, everything related to ops, tying up with the vendors.
And how big was the team when you started?
Yeah, when we started, we were like obviously 2-3 people, right? Just 3 co-founders and like about 4-5 more people with us on the
And
sales
then
side.
when you scaled
I
this,
think
how
we
big?
scaled it. We took it up to like 150-200 people.
Wow. And you witnessed all of this?
Yeah, I witnessed all of this.
And I think you were like 23, 24?
Yeah, I would be like 20. Yeah, I was like 21 to 24, 25 type range. This was there.
Wow.
But I had like Mr. Sudarshan Motwani, who's like, he's one of my mentors and he's like a veteran banker and done it for 40 years. So he made sure that I made no mistakes. Like he was always
Very
there.
rare actually, right? Because
Yeah.
Delhi wasn't even on the startup map, quite honestly, at the
Yeah.
time, right? And then you obviously were doing a startup. You graduated from the US. What was like? What drove you to suddenly do this versus you came from a
Yes,
family that could have got you any banking job, for example, if you wanted.
Yeah, I think just that when you come from this family of like I'm a third generation entrepreneur, right? So the bar is set high, right? There's always, it comes with some pressure also, but dinner table talks are like, what are you going to do next, right? What are you going to do that's big? Like what you can't, like a job is not cutting it, right? So you're always in this head where you have to make sure that you're doing well. The pressure is there. So the pressure can get to you also at times. But I think that's what drove me to do something, and that's what driven me since then till now to just do something of my own. And then obviously I kept hustling to all in capital. But yeah, this I would say it's the family and the background and the childhood that I've had that really pushed me to sort of do my own
So when you
thing.
started BookMyForex, did you think that it would be one day front page news that it gets acquired by MakeMyTrip, 150 crore? You did because you didn't raise any capital, right? I think
No, we raised about 35 crores out of
So you all did,
capital from
okay.
Fairing Capital. Yeah.
From Fairing. When did that come in?
That came in, I know the years I don't remember, but 2013, 2014,
Oh, wow.
same range. Yeah. We raised 35 crores, 40 crores. They supported us quite a bit.
Okay. And how many times did they invest? Was it a single?
Like 2 rounds.
2 rounds.
2 rounds,
Okay.
yeah.
So and then eventually you sell this thing for 150.
Yeah, about 100, 150. 150 type was the figure, yes.
Okay. And what was that moment like for you?
It was great, yeah. So actually I left the business when I was 25, 26, right? And I went for my MBA. But the current two, Sudarshan Murwani and his son, they continued to run it.
Okay.
And they ran it for another 2-3 years. And there was some hard times also in the business. Then COVID hit.
Right.
That
must have been really hard
Yeah,
for
that
them.
must have been hard. So they ran it slowly, steadily because we were unable to raise more money after that. So what we realized was it's an interesting business, right? Forex, where margins are low, right? And what we got feedback from VCs was that how do you increase these margins? Because at 1.5%, even if you're doing 500 crores, it's very ops heavy.
Correct.
Right? So even if you're doing
delivery, all that
yeah,
stuff.
so 1.5% doesn't cut it. So you have to do other stuff around it.
Makes sense.
Now, when you see the journey, right, how do I cross-sell, upsell? Forex is something that person buys right at the end before they travel. They've planned their trip. Mostly, so 70% of the travelers in India are first-time travelers, right? So they plan their trip. They go to a travel agent. They'll buy their tickets. MakeMyTrip is done. They'll apply for their visa. The visa services is done.
Correct.
Then 3 days before traveling, he wants foreign exchange.
Correct.
That's when they come to me. That's when my lead gen has happened. Now, how do I monetize this person who's bought foreign and then flown off? And then when he'll come back next year, probably they travel once a year only or once in 2 years.
And there's no repeat. I mean, what's the
repeat is once in 2 years, right? So it takes time to build the brand because the repeats start to come in after 1 or 2
Makes
years.
sense.
You build a brand. But there were very few avenues where you could actually monetize over and above just foreign exchange, right? You can probably do tours and travels when the person has traveled.
Makes
But
sense.
mostly they've planned everything before. So Forex itself becomes very tough to scale out of. For MakeMyTrip, it's quite simple, right? It's like a natural progression where they already have the lead gen, person is buying the ticket or buying a tour, travels, right? And then it's easy, they can just cross-sell, upsell Forex to that customer. So for them, it's another avenue of
And how much was
revenue
this
that they can get.
prepaid card versus physical, let's say, delivery of Forex? How much was that business over the years? Was it 50-50 at the end, or what was it like?
I have to remember. So I would say it was increasing. So people were getting. I had a big part of my job was to convince, because my margins were higher in cards.
Correct.
It was to convince people that you take card.
It's easier, safer.
Yeah. So this is very interesting. Like I would say, which one, like Policy Bazaar. Even for this is a call center driven business. Like the product is in the call center.
Acha.
How you interact with your customer, how you're able to convert the customer, what are you going to tell the customer that they trust in you and purchase this online, right?
And how do you deliver that trust to the nth agent that was not part of the founding?
It has to be to the end agent, as in to the
like the new agent who has just joined you, to now tell him that listen.
there have to be protocols where the person is trained. We would record their calls, show them calls that were really good, right? And have so productize it in a way that how you have to sell, what you have to sell, what the company stands for. Right, we would have like recordings where we would record calls and listen to them in like good calls. That this is how you sell, right? So you have to. Policy Bazaar is a great example of that. You would feel like, okay, you just go click on a website, buy health insurance. Seems easy, right?
Right.
Then you get a call, so you feel like what's Policy Bazaar actually doing? But their core product lies in their call center. How they are selling, how often they call, how they convince the customer to buy health insurance from them rather than their neighborhood seller. So that's where the beauty of the business lied actually.
Wow. And you said you left the business and you went for an MBA to Spain.
Yeah.
Right? What was there something in the business that made you realize that, hey, I need to upgrade my...
I would say that I was, it was stagnating to a bit, and we were finding it tough to raise another round. So I was like, yeah, I was done with the business. I was like, I want to do something else. And at that point of time, I realized that I've gotten my first into VC, and somehow I realized I want to do VC only. Like I want to become an investor, and I want to go down that route.
And I think you left for the MBA in 17.
Yeah.
By the time the Indian ecosystem had gone through that one cycle of down cycle also, right?
One down cycle, one up cycle. Yeah. Snapdeal had crashed, and that whole cycle had turned, and
housing was just, I think, at that time.
Yes, exactly. That was the time. That was the time we also went for a further fundraise. Where things changed. Yes.
Okay. And then so after your MBA in Spain, again, do not decide to work outside. You like, let's go back to India.
No, actually I tried a lot. So Spain was more just for me to take a 1 year break and just to figure out myself, I would say. And it was probably the best years of my life. That country is just unreal. It lets you think, absorb. We met so many new people, learn from them. So I sort of, from there I was like, okay, I want to do VC. So what I did was I actually interviewed a lot. I interviewed a lot in Netherlands, London, Germany. And multiple VC roles, so got through multiple rounds. Actually, Revolut, I almost got to the final round as well. So I was looking for jobs actively outside. VC I couldn't crack because it was a very specific reason where they said that language is a big barrier. I can't be a VC in Netherlands and hoping to talk to a Netherlands entrepreneur when I can't speak their language. Right? If you look at it, you have to talk to the entrepreneur, convince him to take your deal. And you have to keep, and you know this business, right?
Yeah.
How much you have to
keep talking to them, right?
Yeah, you have to keep talking to them, and they will take money from someone they're most comfortable with. And I realized, and I got this from 2-3 funds, right? That listen, you want to do pre-seed seed, but how will you talk to, how will you like build that relationship with the founder? So I went through multiple rounds of iteration, and then I also said, okay, let me try in India. And then in India, I think there's this whole thing of being not pedigreed. So I was not IIT, not IIM. I couldn't sort of break the barrier.
Especially
Here
in the
also.
1819 era, definitely.
Yeah.
Very
So
big.
most VCs, if they open their inbox, they would have found my CV somewhere or the other inside. I don't tell them now when I meet them, but a lot of them I would have applied to that. I would love to join and work, but I didn't get like a positive response from any VC fund out there.
You
I said,
joined
okay.
Amazon after that. For a
Then
bit.
then I was like, okay, let me see what I can do next. At least let me get a foot in the door in this business, in this sector, right? And that landed up being there's this VC role, venture capital BD role in Amazon, which I picked up, and it was in Mumbai. So then I said, okay, let me just go there and
You
let me
moved to
move
Bombay
there.
for a bit.
Yeah, one year I was in Bombay.
And meanwhile, while you were doing Amazon, and we'll talk a little bit about the Amazon experience, you were also investing in startups, about 30 of them.
Yeah, so when I went to Amazon, that's when I started. So I started to build my network, started to get into the ecosystem, and I said, I can't wait for a VC to teach me how to invest, right? If I have luckily I have the capital to invest. Let me try it out, right? Let me go make them. I know I'll make mistakes, right? That's fair, but let me start learning today. Why should I wait for the tomorrow to come? So I just started to make some angel bets, started to meet founders. Started to meet VCs. So my biggest part of my role in Amazon was to meet VCs and build relationships with them.
I see.
So I would meet VCs. I would co-invest with those VCs. So I would actually meet them, be like, okay, where are you investing? I can help you. So is there any company there's any allocations? I would keep asking VC. Wherever I would get allocation, I would enter, and then try and build a relationship with the VC kind.
Were you driving some thesis or a particular part?
At that time, no. At that time, it was more. I would say I would be lying if I said I had a thesis. It was more that okay, for VCs investing, let's just invest and learn. My main job was that if I invest in a sector,
do you remember the first investment you made?
First investment was MyUpchar.
MyUpchar.
Yeah, I got connected via Let's Venture.
Okay.
And it actually did well. So I got connected by Let's Venture, and I met the founder. I liked it. I committed like a small check, and I think within 7-8 months, Nexus and Shunwei, I marked it up.
Okay.
And they did like a $5 million round. So it was in the healthcare space. So my whole thing was, if I back a founder, money or no money, I should understand everything about the sector within 6 months. Otherwise, this check is not useful.
Right.
If I'm backing someone in creator economy, I should meet the founder at least 5 to 6 times and understand the creator economy within 6 months. Otherwise, there's no point of putting this.
And via the medium of the founder and your own tertiary
Either way,
research.
Either way, I have to. Founder is the best way to learn. Yeah, he has the pulse of the market. He's doing everything, right? He's spending 15-18 hours a day in the market. There's no one better to learn from a founder today. For me, I don't read books. I don't probably listen to very few podcasts. My learning is all from founders. I only go down, spend time with the founders and ask them, who better. If successful or not, it doesn't matter. Even an unsuccessful founder can teach you a lot about a market, and a successful can also teach you the same.
I feel the unsuccessful ones know a lot more than the successful ones.
I would say same. They've all spent the same time. Equally, they're all equal, right? In that sense, everyone can teach you. So my whole thing is, and that's when it started, and it started to work. Like I started to see that, okay, next time when a creator economy company would come, I would know so much more, right? Correct. Because I'd spent that time. So I started, that's the reason why I started.
Oh, very interesting. And then, so your most successful investment from your angel portfolio?
I would say Jiva would be one, the jewelry brand.
That's
one. FleetX is this SaaS company. It's backed by India Quotient, India Mart. I think now they've crossed a $15-20 million ARR in that range. Master Chow is this brand that I've done.
Oh, yeah. Okay.
Yeah. Which is a sauces brand. That's actually something, that's the reason that I did at my time at Stride.
Acha.
Yeah. So when I was doing this Amazon role, I think I kept, so while I was at Amazon also, I kept applying to VCs.
Acha.
Ki kuch crack hoga. And
was there like a barter? You just take me in a job and I'll get you Amazon credits from your portfolio?
That I had to anyways give. So there's no secret sauce in that. So I was there at Amazon. My boss told me something very interesting at that point of time, and he said, so I would say, I'm ready to work for free. Why are they not taking me, right? And he said, why don't you flip the narrative? Ask them, why should they take you?
Mm-hmm. Why should they take you?
Why should they take you? I said, and I kept thinking, and he's like, yeah, because you're not bringing anything on the table. What does a VC business comprise of? What does he want from you?
So true.
What are you ticking off? So I said, for now, I don't know, nothing. So he's like, then start working on that. So I said, okay, what does a VC want? They want deal sourcing. They want a network. They want deal evaluation and underwriting. So pick up one and start working on this and say that you're awesome at this. So I said, I'm very good at networking. let me start to do this. So I went out and started to build a network of VCs. I started to meet them, become friends with them. So I had this network where I knew a lot of VCs and I was friends with a lot of VCs, whatever valued. And that's actually what helped me get into Stride.
Wow.
So at my time on Amazon, again during this phase, I landed up meeting Ishpreet.
Acha.
Who had just left, I think, Yes Bank.
Yeah.
And he said that, I want to do debt. And
working with Loomis at the time, right? Via Loomis into Stride.
Yeah, via Loomis, yes. Loomis. So he met me and he said that Loomis was not there when I met Ishpreet.
Achha.
Loomis came way after as an anchor. But so I met Ishpreet and super passionate, right? He's one of the best entrepreneurs I met in my life. Like, amazing guy, and obviously his journey sort of says that. So he wanted to start. He said, I know debt, but he sort of saw value in me as having this network of VCs, right? Because I'll help him get the deals.
True.
And then he knows how to underwrite it, right? So that's what actually my network is what helped me get into Stride as employee number 1.
Oh, wow.
And then that journey, then I learned, I never done venture debt in my life.
Huh? Just pure hardcore. 2022 you started with Stride?
No, 2018 or 19, I think. It was just
19,
before
sorry,
COVID.
19, you're right, 19.
19 hoga. 19. It was just before COVID. I would get the year right, but just before COVID. And we actually landed up within 2 years becoming one of the largest venture debt funds in India. We crossed
Before we go a little deeper into Stride, I have one question.
Yeah.
Or rather 2 questions, because when you became an angel, you had 2 different kind of experiences. But we say, at least in the VC parlance, right, that in investing you either have success or lessons, right? So we talked about the success. Which investment gave you a lesson that you will remember? And you may choose not to name it.
No, I can't name it, but I would say.
What was that lesson, effectively? That's what
the lesson one, when the founder is not meeting you, or there's something like when there's something fishy and you feel something, most likely it will be there.
Yeah.
Right. So
I think that's a given. If a founder stops giving updates.
Yeah.
And a founder goes, or will
not meeting or some numbers. So that's happened to me multiple times where I've invested in the wrong company. The other learning is to basically sleep over an investment.
Acha.
Don't get too excited.
Please explain that.
So when you meet a founder for the first time and the founder is energetic, right? Most of the times you will come out of the meeting feeling super excited that
Correct.
I want to invest. And if that guy by chance says that I already have a VC term sheet, you almost, as an angel, you're like, I want to do this now. FOMO, right? That is something that I made mistakes in, where I know at least you will be wrong or right. Like, it's impossible that you do 10 bets, 2 will work. That's fair. But out of those 8, in my opinion, if I would have protected myself from my impulse, I would have saved myself from a 3 or 4.
Yeah.
Where I would have slept, I would have waited 2. It's okay. Like, another opportunity will come, you have to realize, and just sleep over it 2 days. And within 2 days, even if you still want to do it, then go ahead.
Actually, you hit a nerve, because I think many times, right after that first meeting, you have a tendency to want to do the deal right away, right? And then you have buyer's remorse after that. So you're better off when the founder says if he has other terms, then go ahead and focus on them, right?
And as an angel, it's very easy. It's just 5 lakhs. You don't think much. As a fund, at least you have to do like 1-2 crore checks. You'll think you have other parameters too, man. Correct. But as an angel, there's no IC. There's nothing. It's only you.
Correct.
Right. So you can get carried away like instantly, right? And you're like, okay, done. But I would. Again, just literally you have to just sleep over it for 2 days and think about it for 2 days. Maybe talk to someone one of your friends, and just discuss it with them. And maybe they say good or bad, whatever, but you sort of run it in your head once. And that saves you from a good 10-20% of bets that you would not have made.
And that actually sort of bleeds into my second question, right? That because you've been a founder and you obviously saw the very tough part of the Indian ecosystem, 2012 to 18-19, you are at AWS. Again, I think 18-19 was again a very tough year in India.
Yeah.
Did that color, or did that... Because, founders have reacted 2 ways to it, who became investors eventually, right?
Yeah.
Either they've become extremely loose with the money, right? Let's just सबको बांट देते हैं types, right? Because फिर क्या है कि that, listen, these are my people, I'm giving back. So I feel that's almost like charity, which may or may not be good for the founder. I leave that to every person to their thought. Or second is that you become extremely discerning. You're like, listen, I have been through this journey. I know what it's like. So hence, each and every rupee I give, I want to be double sure about it. That, you understand that this is a long journey and not a short sprint.
So I'll put it, the markets decipher this. Like, every investor is different. This is so unique, right? Some people have this habit of following the market. And some people are just generally risk averse and, like they would sort of be protective about their money. I feel being a founder before, what it teaches you, and I've seen this outright with anyone who's been an ex-founder, is that you're more empathetic to your founder for sure,
Correct.
who you're investing in. That comes. Like even for my partner Kushal and me, we've both been founders, we've both seen. So the way we deal with a founder is very different from the way someone who's not been a founder,
True.
you deal with incoming founders, right? You're just a little more empathetic towards them. So that's something I've seen that I think everyone learns in their journey. Investing is too personal. Like everyone, it's like the way you play poker, right?
Right.
It's impossible. Like me, you, and third person plays it the same way.
Very
It is
true.
impossible. So it is like it's so intuitive, especially pre-seed investing. Even actually public market investing, it's so intuitive. One stock that I would love, you might not like.
Yeah,
you
it's
might
like art.
love. Yeah, and you and me will react very differently to a bull market.
True.
You might be okay losing. Like let's take an example of poker, right? You lose 3 hands in a row. You get 3 bad beats in a row.
Correct.
You on the 4th hand, once someone would just go all in more, right? And for me, I would get more. I would be like, no. Now I have to get tighter and play safer, right? I have to win my money back. So psychologically, it's very different. So I've actually in my history, I've never seen 2 investors think the same.
Correct.
Never. Even me and my partner Kushal, we spend so much time together on deals. We'll still think differently. We will react differently to market conditions. Our backgrounds are different. Everyone has a different bank balance. Everyone has a different
Risk
appetite. Everyone has different, sort of upbringing. All these things come into play on how you react to investments and opportunities.
Now let's talk a little bit about Stride, right?
Yeah.
So employee number 1, I believe, at Stride. And you said you met the team obviously through your connections or the networking you were doing at AWS. But what excited you about venture debt? Because that was first of all, there was no venture debt in India.
There was 3. There was Innova, Altiria, and Traffic.
Compared to all the other equity funds, it was 3, and I think Altiria was starting with Fund 1 at that time, sort of with Ajay. And actually, Ajay had actually worked for 15,
They were the
16
veterans.
years.
When we entered, they thought that these guys won't be able to do anything.
Ajay was one of the first 5 or 6 guests I've had on the Money Talks.
Oh, okay.
Yeah, so we had a long-standing tradition of sharing old monk.
Oh, nice.
But that getting said, tell me, like, what excited you about venture debt that you thought about starting out?
Like, to be honest, nothing. Like, for me, it was just a way to get to VC. Like, I had one goal in mind, and I said anything closer to that I'm climbing a ladder here. Anything that gets me closer, I grab it. Okay. And I have to succeed in it.
You had decided your end in mind, and then you were just figuring out the steps.
Yeah. So like, this is my goal, and I'm sort of going. Like, AWS is here. Okay, venture debt is here. I have to get here. Like, whatever gets me closer, I will grab onto it. Approach. And no matter what, right? It could be anything. It could have been some other role as well. My job, I ideally have to succeed in that role. Correct. Right? And I had never done debt in my life. Yes, I had this background of debt, so maybe it came to me naturally, but never done debt in life. And for me, it was that I have to enter and I just have to succeed. One of the reasons also, so the whole team at Stride, the core team, we all had this thing where we had this hunger to do well. So when we actually launched most of Trifecta Altiria, and they thought that this is just a small fund on the block. They'll come in, it'll just be like a small fund. They aren't reaching out to our level, but within 6, 7 months, 8 months, we were taking them head on and beating them to transactions. And today, within 2 years, we were a brand at par with everyone. And
it must have been a difficult journey, right? 2019 India was still learning, right? I mean, I started my first fund in 2019. I can tell you it took an ungodly amount of meetings to get a 1 crore check out of somebody. Right?
Yeah, so fundraise initially was hard, but just our hustle sort of we really changed the dynamic on venture debt. Like, venture debt itself is actually questionable. Like, I have instances where founders have taken debt and I know that this wasn't right. Like, I don't know if they're paying it back through equity money. Is it actually going to be of use for them?
Correct.
And sometimes it can be of use as well. So there's always this question in the market that is venture debt actually, should startups take venture debt or not? Is it too expensive or not? What's the actual cost? Right? So that was there. We got a lot of tailwinds because within, I think, 4-5 months of launch, COVID happened. And the moment COVID released, there was this huge inflow of equity money into India. There was this ultra boom, right? Where investors were willing to invest in startups.
True. And interest rates went down to almost nothing.
Yeah,
right?
And the US money was coming in. Now more equity rounds means that more venture debt. The market sort of went exploded, 3x up, right? Now Altiria, Innova, and Trifecta didn't expect this. So there was this whole gap that was created that another player can enter. LPs, so a lot of the family offices in India wanted to get into the VC space. Now venture debt is the most beautiful product. Why? Because they love investing in debt. They've invested in bonds their whole life. Now suddenly I come in, I go into the room and I say, listen boss, you want to invest in startups? They're like, yeah. You don't want to take the full risk, you don't want to lose money? They said, yeah. I said, I'm giving you that option. I'm giving you the safety of debt and the upside of equity via warrants. So for a investor, he's like, I can start dipping my feet into startups like using this product. So this product is awesome. So suddenly there was a huge inflow of family offices that wanted to invest in venture debt. And then there was awesome deployment opportunities because...
I think also banks started participating into this, right?
Banks never did venture as an LP or...
As an LP.
Yeah. Insurance companies, banks, it
was also easier for them compared to equity, right?
But very small tech checks, like 50, 100 crores, that's nothing for the banks. It was just like one part of their treasury or they have a venture arm that's investing. So not like really big. But yeah, they are potential insurance companies and banks are LPs. So money was flowing in. And again, deployment was not a problem. Why? Because there was like an up round happening every week.
Yeah.
Right? And if you're raising 20 million, it was very easy for me to go and say, you know what, why don't you extend your runway, take 5 million over this 20 million as venture debt.
Right. And you said something which I think you should elaborate a little bit because you've been on the other side. And you've been on both sides rather. You've also been you have a banking relationship in the family as well. But what's the best way for founders to leverage venture debt? Like you correctly said, many founders are not using it correctly.
Yeah.
I think debt definitely has a fantastic usage. It can create amazing amounts of wealth if used correctly. And this country has obviously seen multiple instances of listed promoters, unlisted promoters, you name it. And maybe even now there are some cases in the startup industry where they have misused debt. But there is a good case for it. And what do you think that is?
So one, I think just investing in something that's giving you money back. So working capital, capex, right? Sometimes runway extension. I typically don't. So what happened in this 2021 era was that you would raise 20 million, raise 5 million of venture debt. And then in 6 months, you're raising another 80 million. What was the need for this 5 million of venture debt? You didn't use it, right?
Correct.
Why should a edtech company raise venture debt?
Correct.
You're burning money. You're not revenue generating right now. You're giving you, let's say, like a consumer tech company. You're not burning money. You're not revenue generating. You're basically hoping for the fact that someone gives you equity ahead, which you pay this debt off for. This debt is expensive.
Yeah.
Like it's a 13-14% IRR debt. Plus there's a
Kicker.
8 to 10% warrant in our head. So the IRR we promise our LPs in venture debt is close to 20 to 22%.
Wow.
Which is essentially the startup has to pay me that amount of money. Hence
in fact, it has to be more, no?
It has to be more because there's fee after that. There's
and also maybe some problem childs here and there. So overall,
overall 24-25% is what a fund has to net, right? Post fee, post carry, post tax. If I have to give 20%, so the founder has to give me 25%. So your even venture capital, for that matter, is not that much more expensive than 25%. This you have to pay back in 3 years.
Right.
So I've seen founders where they've raised money and the equity round didn't happen. Now suddenly the debt is becoming too expensive to pay back because they have to pay it back. They can't default on it. So my fundamental thing is that one, working capital, capex, anything that's generating cash, right, use debt. The other is if you're actually, let's say if you are extending your runway by a certain amount. For that, you don't raise the venture debt with the equity round. You raise it like, let's say 8-10 months after. And you have clear clarity that you most likely will get another equity round in the next 6 to 8 months. And you're raising this debt for getting to a certain milestone.
Or you could burn enough in case that doesn't happen to at least pay off the debt.
That very rarely happens, right?
I'm saying if you're really planning it properly.
Yeah. So I typically would always only these 2-3 scenarios is where you should take it. Otherwise, if you need money for runway or to burn, go to equity. You don't have to pay it back. It's a safer option. And if you're not getting equity, work on your business. That equity investor comes and invests in.
Correct.
Debt is not going to solve your problem in the long run.
And because, I think venture debt was very young when the first round of COVID hit us, right? And suddenly companies that were doing revenue, burn or not, let's leave that aside, but suddenly revenues went down to zero for at least 3 to 4 months. Nothing was moving, right? And in that situation, you as venture debt investors have to take out EMIs. What was that like?
Equity money is paying for it. We are just jumping on equity. So at that time, there was so much money flowing in.
And I'm talking about that interim period between March and let's say July.
March and July, there was no transactions that happened. All VC shut shop. Everything was standstill, right?
Correct.
The moment you entered August, there was this inflow of money that came in, right? Like there was money everywhere. Literally equity money was paying for debt.
Achha.
Then when the market stopped, you suddenly saw so many of these MPAs happen in venture debt. Like Go Mechanic happened. I think a lot of these other
they're more
Mojo Care and big other companies. But if you see, in that time, equity was paying for all debt repayments. And at that point, VCs didn't think much. They were not worried about, like, they were just worried about doing the next best deal that's in the market, rather than worrying how this company is using their capital. I saw it happening actively, yeah. Like, it was just
Were you trying to mentor the founder? Ki this is the slippery slope.
You can try, but at the end, the founder does what they have to do. Yeah, venture debt is, so one of the things I sort of didn't like about venture debt is that you're not that involved with the founder as you should be.
Also, you can't take board. You mean not normally on the board? And
Never. You're never on the board. They're normally like 3 venture investors in a company.
Yeah.
Unless you go and build a relationship with the founder, which you and the business also as such.
Yeah.
So I have to jump from one company this month to it's a disbursement business because I'm getting money back every month. So I have to disburse next month. So me as an employee of a venture debt fund, I'm on a treadmill. Like I have to find a new company next month to disburse again, then the next month to disburse again.
And then
so I'm
this
switching.
Proliferation of venture debt firms, right? I saw so many venture capital firms come up with venture debt solutions. And after there was such a dichotomy there, right?
Venture capital fund managers were like, wait, listen, I'm promising 25% to my LPs. And this guy is just taking 25% easy over a year. This is such a better business, right? So let me just try doing this, and I'm underwriting my own company, but that doesn't work ever.
Yeah, because you have to make a bet.
You can't lend to your own asset ever, right? So that's captive financing as an issue where you invest. How do you know? Right. If you've given debt to this person that's senior secured, then when let's say the company liquidates, who will you pay first?
Correct.
Right. It's a conflict of interest clearly. So venture capital funds over time can't.
And in fact, I think even equity requires a different mindset, and debt requires a very different mindset.
Yeah, absolutely. Yeah. Equity requires you to be a little more lenient. If the founder fucks up, you would be like, okay, it's fine, like at debt, you're like, if my debt is risky, you would pull out of the company there and then. No matter if the company dies, what happens if the cash flows are bad. If I say the company has to maintain a 4-month runway, it drops to 3. An equity investor will be like, okay, let's get on the table, let's figure out how we can do an equity raise, should we do a bridge round, how to get this company forward. A venture debt guy would be like, pull the money out.
Correct. Which actually might reduce the runway from 3 down
to 1. It'll die, but the venture debt guy doesn't care. He just wants his money protected.
But I think this is the part that most founders don't understand.
Yeah,
that
absolutely.
You can't go down below the
They have covenants, right? And they sign on covenants that this will not happen. I have so many founders in that 2021 era. We would put covenants like you have to maintain a 7-month runway. They would be like 7. So, no, let's sign it.
Have you seen how many zeros I've raised?
Now today, if you make a founder sign that same paper, he'll think 10 times because you'll know I can, because funding is now not abundantly available. But at that time, no one was caring much about it.
It's amazing that you've actually had this 2-3 rounds of the down cycle, up cycles, because it changes the way you invest, and also it changes the way you advise founders.
Absolutely,
Because very interestingly, I also started my India journey in 2012. So when you're talking, I'm just replaying everything in my head too. And then you made a switch, right?
And then I made a switch. The switch was actually very interesting, where I was kept doing these angel checks, and I met this company called Master Chow.
Achha.
That they actually used to run this Walk Me chain, which was it was an Asian bowls chain right outside this bar called Summer House. And after drinking, I would always go there and eat, right? And I became friends with the chef, and I'm like, okay, chef was Vidur. Siddhant used to also work with him. So that's how I met them. Then COVID happened. And they suddenly called me one day. They're like, yeah, listen, our store shut down. It was doing so well. I said, yeah, man, your sauces are awesome. So they said, I said, okay, send it home. So they sent it home. I tried it. I said, you can actually just bottle this and start selling this. And they were like, yeah, that's what we are doing now. We are bottling this. We are selling this. And they came up with the brand Master Chow. And I said, yeah, let's do this, man. I'm going to take you through this journey. So I sort of committed first angel to commit.
Achha.
Then I introduced them to 2-3 VCs, consumer VCs, got their deck made, helped them to raise the round. So I helped them raise their whole pre-seed round. Then I got their seed round done. Then I got their Series A round done. But this was one of the few companies where they relied on me, and obviously it's a big pressure that they are relying on me to help them. And I sort of also came through. I sort of achieved more than I thought I can help them. I achieved. And I said, okay, wait, I think and I always wanted to do this. Now it plays back that I always wanted to do this. And I finally got to do it with the company, and I succeeded. That's what then I was like, okay, now is the time. I've built my network. I've proven myself at Stride. I think I've ticked off everything. Let me sort of quit and now play my dice out at venture capital. And that was my tipping point, that even if I don't get into a fund or anything, I'll just pick out 1 or 2 of these Master Chows a year. and help these founders.
And you
that's what
started
I
out
wanted.
as a syndicate fund, or was it?
Nothing. So I didn't start off with any fund. So I actually just quit Stride with nothing in hand.
Really?
And I started to meet people in
Like
the
one
market.
खतरों के खिलाड़ी हैं भाई.
नहीं, आई थिंक उतना कॉन्फिडेंस तब तक आ गया था कि
अच्छा.
यार कुछ तो हो जाएगा. लगे हुए हैं इतने सालों से, इतने लोगों को जानते हैं, कोई तो आएगा सामने से जो हेल्प करेगा, या आई जस्ट फाइन. तो कॉन्फिडेंस आ गया था तब तक. तो फिर आई लेफ्ट. आई मेट अ लॉट ऑफ folks in the VC space. One of my friends, Kushal, he was part of First Check.
अच्छा, हाँ, correct.
Yeah, so
one of the guys was
Yeah,
the
he
founder,
built he was the founder of First Check. He built one of the best pre-seed brands in India, backed about 100 companies. And he was leaving. First Check was this a smaller fund under India Quotient.
Correct.
Very few people know this, but yeah, it was actually India Quotient fund.
He did some amazing deals first.
Yeah. First Check, Jiva is one of them. In Fashionza was there. Fleetex. There are multiple of them, right? He's done really Vint Wealth. So he was quitting First Check and he was starting his fund. So he had already thought of All In as a brand. So he had said कि All In कर रहा हूँ मैं. And then I said यार, then I literally actually hard sold myself to him कि यार मेरे साथ ही शुरू करना है तेको ये. And he was initially a little iffy कि why you've done debt, you've never done equity. So yeah, that was like a pure sales pitch that I had to chase. I chased him down for 1 month and convinced him कि तेको मेरे साथ ही शुरू करना चाहिए. And yeah, and the rest is history. Then 2.5 years we've been running this fund.
So the initial fund was it a Cat 1 fund?
No, it was a Delaware Incorporated fund.
Acha.
Yeah.
And so most of the money was then foreign.
Yeah, most of the money was foreign, yes.
Wonderful. I actually love the brands you worked with, right? For example, BookMyForex, all in capital, right? And I love your tagline. We love founders who go all in so that we go all in on them.
Yeah.
Right? Is there tell me the bit of this history of how you're choosing these brand names?
This is Kushal. He's amazing. If you go through his Twitter profile, he writes really well. And most of this is him. But we both resonate with it strongly. Like if you talk to our founders, also our founder NPS is very good, right? We go all in on them and we make sure we do whatever we can, right? If they call us up so if you see on our website, there's this thing called 2 a.m. friends. It's written, we've written it down there that we have no EAs, we have no chief of staff, nothing. It's just us directly. So you call us, you talk to us, we are the ones who come on the first call. Because we're pre-seed investors, the founders just starting up here.
Correct.
He needs to meet me. I'm the one who's going to help him and he needs to spend time with me, and I also need to equally like the person, right? And if they are going all in, we will do whatever we can to make sure they
win. How do you do that at scale? Yeah? I mean, the two people. At some point, you're going to get to 100 companies, 200 companies. I'm not saying
we're already at 53.
Yeah, think about that, right?
So,
not to say you should not be available. I think just needs to be structured.
So the way I look at it is that we start at pre-seed, right? That's when we come in, right? Then there's a seed check where a larger investor comes in.
Right.
So let's say if out of 50, a few companies, let's say 30, 35 get here. Right? 15 sort of follow. Then after the seed, we are still there. At Series A, then another larger investor sort of like Sequoia, Accel, one of those guys will come in. Now at this point of time, we sort of go back to our initial cohort. So here our time spent sort of starts to fall down. And we make it clear with the founder, and now we don't take board seats, nothing. Our funding.
What's your typical check size? What do you exactly?
So we do, from our fund 1, we used to do about 1 to 2 crores
Achha.
For 5% of the company. Now we are doing 4 to 6 crores, 3 to 6 crores for 10%.
Achha.
First standard, first check. Quick money, you meet us, within 10 days we'll say yes or no. Within 2 weeks money will be in your bank account.
DD and all that?
It's pre-seed, pre-product, so not much
DD. It's a pre-seed,
DD
pre-product. Okay.
Yeah, so DD in the sense we do ref checks. We talk to, if they have customers, we'll talk to the customers. But my team is designed in such a way that we move very fast.
I see.
So if I say I want to do a company, then they have someone from my team who will spend 1 day. And in my opinion, if you're doing DD in-house, it should not take you more than 1 day to talk to 30 customers you have to talk to. That's 2 hours. You have to talk to his ex-employers. Another 2 hours gone. You have to talk to some sector experts. Correct. Another 2 hours. Why should it take you more than 1 or 2 days? What else will you do, right? You have to do market research another day. So 2 days, 3 days max. And you've obviously spent. So we're spending 10 days with the founder building a thesis. Diligence is what we do by talking to people who we spoke with.
But legal and all that kind of diligence?
Legal, we standardize the documentation.
Achha.
All documents are the same. We actually give it to the founder before we give the term sheet. This is the SHA. If you're okay to sign this, we sign it tomorrow.
Okay.
So we have a CCD. If you're okay to sign this, we sign it tomorrow. And the CCD is a 5-6 page, very simple CCD where everyone's rights are protected. I've written it, or we've written it down from the point of view that I am the founder.
Got it.
What would I want
But are
to
you doing
sign?
CCDs or CCPS?
We do all three. So we do
Achha.
CN, we do CCD, we do CCPS, depending on what the founder wants. But we're okay to do CCDs as well, CNs as well. But the document is structured in a way that I am a founder, what would I want to sign?
Correct.
So there's literally, we get one comment back sometimes. They send it to the lawyer, there's no comment. They're like, I said, yeah. So I went through all the documents we've done, right? If you see, why should a 4 crore round take 3 months to close?
Yeah.
There's no reason for it, right? And we went back, actually, we like, what do we fight on? Indemnity, tag along. Let's see what we fight on, right?
Correct.
What does it... So we actually started to streamline those clauses.
In what way? For example, let's say tag along.
So in CCD, there's no tag, like
Correct.
there's nothing, right? So what people
do.
do in CCD, we normally do CCD. So in CCD, what people do is they define each clause. Tag along hai to ye pura ek one page hai. So then people fight on tag along. But as a CCD, you don't have rights in the company, right?
Correct. Yes,
Most of the time, whenever the next fund comes in, there'll be a new SHA that will be drafted, and you can fight for your rights then. So what we say is we tag all the rights, tag, drag, lick pref, etc. as per the next investor would get.
Perfect.
Story over. Our incentives are aligned. So whatever you're giving to the lead in the next round is what you'll have to give me. Right now, there's no SHA right now. Even I don't have a debt holder in the company.
And that's very true. It's a very, very efficient way of doing it.
So there's no point only, there's no fight. You save, everyone saves.
But then how do you fix the valuation if it's a CCD?
A post money, there's the post money cap, let's say 24. Basically, it's a ceiling and we fix the price. It'll convert at this price only.
Perfect. So that's very
it. So it's a price CCD round, 5-pager. Rights are linked to the next investor lead coming in. If the lead doesn't come in, anyways, the company is not going to do well. So what are you going to do with all these rights, right? And if that investor comes in, you get all the rights you need.
That's a very simple and efficient way of doing it.
So we are the fastest pre-seed fund, and why is we're sort of solving for speed. The faster the founder goes to market, the faster they build, the more likelihood they will succeed.
Correct. Oh, very interesting. And then, so where else does All-In Capital differentiate itself from other funds?
First, for this, I'll sort of divide. I'll have to break down VC funds, right? So we have this access picking entry metric, right? How any fund can differentiate themselves, and they'll have these verticals. And you're a fund manager, you'll understand this. Access is the next Flipkart coming to me. कि बिन्नी बंसल आगे मुझे pitch भी कर रहा है क्या?
Correct.
You could be the smartest person in the world, but you're sitting in a room, you can't succeed because the Flipkart didn't come and pitch to you.
Correct.
Right? Now, the Flipkart is coming to pitch to you. The next aspect is picking. You can say, boss, मैं picking में I have 400 deals. How do I actively see कि कौन सा है इसमें से जो बिन्नी बंसल बनेगा? So you have to pick out of the 400. Then last is brand and try to win. You choose the asset chooses you. You could do 1 and 2 amazing. बिन्नी बंसल आया, मैंने उसे pick करा. But you gave a term sheet and he didn't take it.
Correct.
1 and 2 का कोई फायदा ही नहीं हुआ. Again, you didn't perform and you don't outperform the market. Why? Because my brand was better. I took the Binny Bansal away from you. And I'll make the IRR. You will not make it. So you have to pick all. These are the 3 basic verticals where you have to work. Now someone can say, I'm very good at picking. मेरा access थोड़ा weak है. But out of the okayish access I have of deals, I'm amazing at picking the right founder. Someone can say my brand is super awesome, so I do the deals I want to do, and hence that's my moat. You have to work on all these 3. So access for us can be inbound and outbound. So one is we go chase the founders. Correct. The other is we get inbound. Now for inbound, what can you do? You can build a brand. You can, let's say, you're doing these podcasts, right? I'm guessing it's helping you building a brand. It's helping you with access. It helps you with the brand as well. People know you. They're more likely to take money from you.
True.
So access, you take this vertical as access and you say, how do I build this access out? So for us, in this access space, we have this thing called a venture partner network. These are ex-founders.
I had a question on that.
Yeah. So when Kushal started initially, he used to go at first check. The business model was that, okay, you go. Fareed is a venture partner. Fareed from ShareChat. Wherever he's investing money, you invest. Right? Why? Because they have great access. Right? They know what good founders are. Like a person leaving from IIT Kanpur is most likely going to reach out to Fareed because he's also IIT Kanpur.
Correct.
Right? So he has great access and he knows who's a good founder, bad founder. He can judge founders really well, and he's been a founder himself, so he can understand markets as well, right? So that's how he started. So Kushal built this venture partner network, and we continue to build this network here. So what we go and say to these venture partners are that, listen, you come, help us evaluate deals, co-invest with us in our deals.
Very
we give you free and question all our deals. Right, we have this community of venture partners, and in return, what we ask is give us all the companies that are coming to you. We'll evaluate for you. Why do you don't have time, you're running your company.
Correct.
5 of your friends reached out to you. How do you know which one's the best? Give it to me. I'll do it for you.
And how big is your team?
The team is five people now, yeah. So me, Kushal and 3.
Acha. And based out of Delhi?
2 in Delhi, 3 in Bangalore.
Bangalore, okay.
So when so this venture partner is our access, right? So this is my inbound access that
Correct.
I'm working on, and this is a big moat that we have. Kushal built it. Now me and him together we build this. We have about 45 odd venture partners that are active.
Okay.
And actively send us deals and actively help us evaluate. This is in the picking also, so they help us with picking as well, right? How do we pick better? So I chat, Kushal chats. We have a sector expert who comes in with us and
Correct.
invests with us as well.
Very interesting.
So that's our venture partner network. That's one of our differentiations as a fund, right? Being super founder friendly early, and we help founders. That's another one. That's a brand we are building. So that's more on the right to win. Why people come to us and why people take our money is because we are very founder friendly. We have this fast note. So speed is another one.
Correct.
You're constantly, like I said, it's a business model. You have
Constantly
to
keep innovating on
every quarter. Me and Kushal sit down and see what we've done in these 3 verticals, where we stand today, and where we can improve. Do we have to improve picking? Do we have to improve? Did we see 90% of the deals in the market in the last quarter? We did good deals or bad, doesn't matter. But you have to ask yourself, did you see 90%? Yes, maybe I saw 70 and the remaining 30 were bad, but they should have come to me. I'll decide if they're bad or not.
Right.
I cannot say before if they're bad. So I need to see 90 to 95% of
But are you also accepting cold deals, or it has to come to the way?
Everything. Our website forms are all looked at by me.
Acha.
One of our companies called Dashwave, which we invested with Axel, actually came through a website form.
Really?
Yeah, because how do I know Binny Bansal has filled my form? I didn't read it only.
Yeah.
A generational company came, pitched to me, wanted money from me, but why? Because I was too lazy to read my application. I can't do that. Right? So every application form is read by me. We make sure that's in my picking, that if I got 400 deals, I have to see all 400.
Yeah.
I cannot see 200, pick the best 2 and be like, I didn't see the other 200.
Correct.
So we see everything. Otherwise, what's the point of building that access?
Yeah.
If you're building access for me, at least see it, right? So we sit down every quarter on these 3 verticals and see what can we do to better ourselves in each of these.
And you also have this thing which is very unique. I just read about it, which is this. What is this obvious versus non-obvious founder framework that you've set up?
So this we came up with because we realized that when you're in the pre-seed space, right, you have to you know that the founder wants money from Sequoia first, right? So all these larger investors, they sort of index on pedigree. It's a pre-seed, pre-product company. How they cannot take a risk on the founder as well.
Correct.
So we call them obvious founders. Let's say a CEO of Myntra leaving the company. That's
an obvious founder.
That's an obvious founder. And most likely he will get 2 to 3 million at a $15 to $20 million valuation on day one. Right? So we call them obvious founders. As a fund strategy, we can say, okay, we want to go and change. We get access. And we've done it in the past also. We've gone and backed one of these stellar founders at a $15-20 million valuation. Correct. With, let's say, a tier 1 investor. So we over time pivoted. Like in the first year, we would get access. And we said, yeah, listen, we don't want to play here. They have no right to win. Tomorrow, when I want to increase my fund size, increase ownership, what will I do with 1-2% when the larger investors take the majority pie? Let's own the other space. Let's go to this non-obvious. The guy who cannot go, or let's say he's these 6 funds and they think it's too early. After that, we should be the first call. So we have to own this non-obvious founder space and do everything to help this founder build a brand in this space. Not even spend our bandwidth chasing those companies. That's mostly outbound. You'll have to chase the person down. Be like, oh, this person's starting. Let's reach out to him. It's a hot deal. Release your bandwidth from there. Focus on this non-obvious founder and this market.
Very interesting.
Own it.
And I think it's also very important that founders also find you. Like you've said, that you make it easy for them to find you, but they should also choose you in some way or the other.
Yeah.
Right? And it's very, very interesting stuff. Maybe before we talk about your health drive, because we're going to come back there now. What are 3 questions a founder should be prepared to answer when they are getting on a call with you?
So one is, why you? So why are you the right person to win in this space? What unique insight do you have in the market? Right? So why are you the right person to execute? There are 100 ideas out there. Ideas are abundantly available. Decks float everywhere. Execution is what's best. So why are you the right person to execute and win in this space? Right? 2, why now? So what's changed in this world over the last 2-3 months that makes your idea relevant today.
Right time.
Right time, right? Or time, just there has to be something that's happened in the market, right? Every other large business you see, there was some why now that happened. Internet happened, so Facebook came up, right? There has to be some why now that's happening, and you should know the answer to that. That why is it happening right now? Lastly, I would say how you would give me money back.
Got it.
So today, if I'm giving you 3 crores or 4 crores, do you have a path to give me back? I would say maybe not 500, but 100. So how do you 20x the company from here? Do you have a journey? Do you have a product roadmap? How will you get there? So having some sort of semblance to how you're going to scale.
And how long is your usual call, the first call you do with the founder?
Yeah, an hour.
An hour?
Yeah. Depends.
But is there a filtering that happens before you talk to any founder?
So I would say 2. So if it depends on where I'm getting the company from. If I'm getting the company from a very trusted source, it will be a 1 hour call. If it's, let's say, an application form that's come in and I sort of see it, there'll be 30 minutes just to check that if it's worth like spending more time or not.
And if you say no to a company, what's the sort of flow you go through for that? Do you actually let the company know why you said no? And
Because of the volume we have, I almost see like I can get inbounds of 30-40 companies a day.
That's
right. So I try to respond to each and every one of them. I've tried and productized it using this product called Super DM now. But I'm trying to productize it.
Super DM, tell us about this.
So this is a new product. I think it's just in the beta phase. So I'm one of the few ones trying it out. So it's a WhatsApp for your business. So it's just a link in bio product. You click on it. It opens up a chat, and it sort of, the person can just write to me over there, and I can limit the words they can write. Once they write this out, they can attach their deck, or they can choose why they're reaching out to me. Do they want to get hired at All In Capital? Do you want to pitch to me? Or do you want advice on something, right? You want some coaching, whatever. So you can pick 5 things. When I go, I can actually filter out. And when I click on them, the guy's LinkedIn profile comes right on the right.
Oh, wow.
So I don't have to go on LinkedIn and see who this person is.
This is a desktop product?
It's on the mobile phone as well. Okay. So I can be on the road now replying to my DMs. And now I can put this on Twitter, LinkedIn, everywhere, and they all come to one place.
Oh, wow. Brilliant.
And then what happens when you open it, the founder can see when I replied to the last DM I got. So the founder knows if I'm active or not.
Achha.
So I'm using this now.
It doesn't replace LinkedIn messages. It's basically telling you put a link on LinkedIn.
On my LinkedIn bio and it comes there.
Achha.
It's been amazing till now. But generally I'm saying on average I'm getting 30.
There is a super referral link, send it to me.
Yeah. No, I'll connect you to the founder.
Indian product?
It's an Indian product.
Achha.
It's one of our anti-portfolios. I really regret not investing. But yes, he's an awesome founder. He's ex-Misho, and I'll connect you to him. So you should surely take it. But yeah, so 30 or 40 decks a day.
Wow.
So I cannot go into every deck and start giving meaning. They reach out to me. I really want to give them feedback and help them. But at times it's just impossible to do. I can't do it for 40 companies a day, right? So I get back to everyone. But a lot of times it's just generic that, hey, thanks for applying. But I just don't understand this space. But I'm seeing it is what matters, yeah.
No, I mean, the reason why I actually send those 3 reasons back, I send 3 reasons back for everything I say no to.
Oh, wow.
And the only reason is that our brain will play tricks on us later on in life, right? So I need to remember why I said no.
Yeah, that's also true, yes.
Because baad mein if you could say, mere paas time nahi tha, or whatever, you might come up with 10 different excuses, but you had a thesis of why you said no.
Yeah, that's actually a good point, yeah. So maybe where I'm spending time, we give a reason. I call. If I spent like a week or 10 days with the founder, I will call and tell them what happened, what didn't happen.
Obviously, you can't give it to everybody. But
yeah, but like if someone I've not even spoken to and it's a cold inbound, then I can't give feedback.
Very true. Yeah. And I think that obviously would just be a lot of work to get done. Good. So I want to now talk about this whole health thing. You're one of the only guys I know who's putting stuff about health on LinkedIn, which is a professional platform.
Yeah.
And you're using it like
Instagram.
Yeah. So tell me about this unique approach.
So I just recently started, so I feel like I had 1 or 2 personal posts that people know about me. So I've always, like as a kid, I loved playing sports. Just continued to play like through and through. I started with basketball. I've even played in the US, right?
Achha.
I played basketball in the US as well. Came back and it's just been really a big part of my life. Even in Spain, actually, I went there. I got into this thing called CrossFit over there.
Right. You're a certified.
And then I got certified as a CrossFit trainer also. I went through because I came back to India and I realized there's no CrossFit trainers here. So I said, let me just become one.
You're not invested in cult either.
No, I would have loved to. Yeah, like Fitter, Cult, and these companies that I keep looking out for something in fitness, but very rarely a good company comes. So yeah, I feel like one, it gives you discipline, right? It just like even that 5 kilometer run today in the morning energizes your brain and just makes me function better. And just a fit mind, or like a fit body, a fit mind just helps you make better decisions, right? And it just gives me like, it just makes me feel so much more better. So I play almost like one sport, like at least 5 times a week. Like I work out morning, evening actually most of the days.
Acha.
So I'll do like a
Because
sport.
that's
in the
my
morning.
last question for you before the rapid fire. Because as somebody who wants to work out, I stay fit just by diet control and try to.
Yeah.
I mean, maybe 2, maybe 3 times a week is what I can really eke out at most time because I'm traveling as much as I do. But what is the ideal workout regime for a founder or funder who is constantly on the go and pulled for time all the time?
The first thing you should do is take your first morning call in the park. Walk for 1 hour.
Acha.
Walking is the best way to burn fat. If you Google it also, walking burns the most amount of fat because you're in that zone 2 category.
Right. And how long? 1 hour? You're saying 1 hour?
Any amount. Anything is better than 0.
Yeah.
So put your headphones on, take that call, and a normal call lasts 45 minutes, like an internal team call
Yeah.
or something that you can take online in the morning or evening. Put it up, buy one of those health trackers,
Yeah.
and make sure that you're walking at like more than 110 beats per minute heart rate,
Right.
and walk for 1 hour. That's the first. If you do that for 3 months straight, and you'll anyways in your normal diet, you'll see like your body will transform.
Wow.
Because you're and in the morning it's much better, but that's the first thing you would do. But in my opinion, just a sport like pickleball, like there's so many of
Yeah.
these newer sports that have come up. Like just block 30 minutes of your time in the evening. You can start working after your sport. Who says that once you play a sport you can't work
Correct.
again? So pick a sport. Say that 7 to 8 I have to go and play this sport, right? And you go and let's say it could be table tennis also, could be anything, right? 7 to 8 I'm just going to go play this sport, and after 8 I'll start working again.
Yeah.
It's fine, it's fair. So add that at least 3 to 4 times, add by one sport you have to play, because I think that really helps. And this walk, and I think that's to start off with, that's good.
Definitely very, very fit. Yeah, and very, very, very sage and very simple advice.
Yeah,
'Cause I think-
something that's doable, right?
Yeah.
Because there's no point.
I don't think I'm not out here to make 6 packs, right?
Yeah,
I don't think
exactly.
that's our-
Like I'm just over the top myself. Like I tell people, there's no reason to do it twice a day. I
Yeah.
do it twice a day because I enjoy doing it. I take out time to do it.
Correct.
You don't have to do it.
But 5 hours in a week is more than enough. I'm guessing.
More than enough. Yeah. 5 to 6 hours every day. And when you start playing this sport, you start realizing that the days you have to do it for like 2 months, and the days you don't do it, you'll automatically start saying that, okay, I'm not productive enough. I want to go play.
Yeah. Our CEO in the office, she's nuts. Like this, Sandesha will be like 6:30. She will be out of the office. Doesn't matter what it is, and she'll be back at 8:30. Right?
Yeah.
Like I'll work till 12 at night. That's fine. But
That's okay. I just take this 2 hours and just go and play.
yeah,
And
she'll go to a cult
wonders.
and come back, and that's it.
It'll
Take
do
a shower, ready
wonders.
to go.
Yeah.
Great. I mean, it has been an amazing conversation. I didn't even realize we're almost an hour and 30 minutes in.
Oh shit, I didn't realize, man. I thought it's been like 30-40 minutes.
But it really is awesome to hear this story, Aditya. I mean, we're fellow fund managers. We have some common portfolio companies, by the way.
Oh, really?
That I just sales Ken was one of them.
Oh, okay. Nice.
We'll talk about that later.
Yes, 100%.
But really, very, very interesting the way your career has, blossomed. And very interesting to hear about All-In Capital. I might steal this whole CCD idea.
Go for
because
it. No, we're
it's-
making it public soon.
Yeah,
So
because I feel
I
that-
think in the next 2 to 3 weeks, we launch it we want everyone to use it.
Yeah, I think that the SHA handling, even I've realized, and I keep telling founders that, don't worry about the SHA so much because it's going to change in the next round. But I think
Yeah.
maybe a CCD, because we as investors go all the way through Series C. So as it is at Series A, I'm going to be back as a lead.
Yeah.
So that's definitely will be helpful. Maybe I'll call it the All-In Capital CCD.
We have a name for it. You'll see it within 2 weeks. It should be out.
No, great. So as you know, and as you've seen in all our episodes, we end with a rapid fire. This is the
Okay.
part which is unscripted.
Oh, great.
You have no idea what I'm going to ask you. The intent here is just whatever first comes to mind, just say it. And it's probably I've got 15 questions. I'm probably going to end up doing 10.
Okay, cool.
But whatever first comes to mind, just say it. And I think we'll learn something new about you. And
Perfect.
maybe you'll learn
Let's do
something new as well, right?
Let's do it.
So the first question, what's the last book you read that profoundly impacted you?
So I read Romancing the Balance Sheet by
Romance.
Anil Lamba.
Okay.
And I put it on LinkedIn post up also. Super book for any founder to read. Explains how to read balance sheets for a founder who's not from an accounting finance background, which most of our founders are not.
Very true.
And explains it to you in such a simple way that you can actually use it in
Wow.
real life.
Romancing the Balance Sheet. That's a good book. I'm going to put that in the comments below, by the way. Second, work-life balance, myth or reality?
No, it's a reality. It has to be there, especially like in our business. 100%. I maintain it for sure.
The work-life balance.
Yeah.
You're the first person who's ever said that.
Yeah. And you have to do it. Otherwise, it's a marathon. Yeah, it's a marathon, and you have to figure out the right way. Unless work gives you that amount of happiness.
Yeah.
So if working a lot gives you happiness and you can stay mentally sane and do 18 hours a day for 3 years,
Yeah.
and it doesn't take an impact, do it.
So how do you maintain your work-life balance?
So for me, I just do the stuff I love to do. Like for me, if I don't wake up in the morning and go for a run, if I don't have time for that, I won't be happy. If I can't play sport 5 times a week, I'm not happy.
Got it.
So I'm saying just chase happiness. Doesn't matter what gets you there. For you, it might just be working 15 hours a day and then you sleep like a baby at home for 8 hours and you get up, all your parameters are fine, your diet is controlled. Perfect. And you can do this for 10 years. Go for it. Do it, man. Hats off to you. But for me, it's individual, right? Basically, just do what makes you happy. Have that mindset that you want to get there and you want to make yourself happy and just maintain that mindset, right?
Makes sense. What's the first action you undertake after waking up? Like you woke up and first thing you do?
First thing I wake up and I have this drink.
Immediately?
Yeah.
It's next to your bedstand or something?
No. I go to the kitchen and I have
Achha.
it. Yeah, I make it myself. So it's a glass with glutamine and fiber. So I mix that up and I have it in the morning, so it helps with digestion and glutamine helps with recovery.
That's true. And,
So,
like,
and it
you
helps
don't-
your
you
gut. It helps your gut reset.
Achha.
So that's the first thing I do.
But is there like no checking of emails as soon as you wake up?
No. The
nothing?
first I literally wake up, I go to the kitchen, literally I put that water and I'm like mixing it for 5 minutes and then I drink it.
Oh, wonderful. Wow. And what's one meal you could eat forever then?
Oh, I would say Asian.
Asian.
Yeah.
Anything Asian.
Anything Asian. Pad Thai.
Pad Thai. What's one app you're obsessed with at the moment? I think I already know.
Super D.
Okay. So let's see. Which Indian startup would you have loved to invest in?
Zepto.
Zepto. Why?
Just like it's a generational company, you have that much value being generated in such a short span of time. It's never like.
Was it offered to you?
Not me, but my partner Kushal.
Acha.
Yes,
Did he?
No, he was
he
it's his
didn't.
anti portfolio.
Yeah.
So
it's in my anti portfolio too.
So I think just that's a generation. It comes once in maybe 10 years, a company like that. And you have the opportunity to invest. Like US VCs invested. They went to a YC demo day.
Yeah.
So everyone had the option. Everyone somewhere or the other had seen the company. It was named something else back then. But very rarely you come across a company that's generated so much value in such a short span of time and is just starting out.
Yeah. What's a quote that you live by whenever you're, let's say, in a tough situation or you feel lost, maybe it's a tough day, a quote that keeps you going?
So for me, it's opportunity meets the prepared mind.
Achha.
So you have to prepare your mind in a way and opportunity will present itself, like always. So you prepare so that you prepare in a way that you already have the opportunities already there.
Okay.
Right? And you prepare your mindset in that sort of way and the opportunity will come for sure.
Will come
like,
for you.
It'll come.
Wonderfully
Be
said.
patient.
What startup trend right now do you think is overrated?
Consumer. Yeah. I'm a big consumer investor, but I feel like it's overhyped. There's not that much space. Like too much is getting funded too soon and valuations are a little higher than they should be.
Yeah, that's true. I think there is a bit of a bubble now growing over there.
Clear
Especially
bubble.
everyone saying, I'm going to go offline and then give me money.
Yeah, it's the same playbook.
Yeah.
There is a clear why now. There is an opportunity. I'm not saying there's not, but it's still low hype.
Few of them have it. I don't think.
Yeah.
If you could master one new skill instantly, what would it be?
Skiing.
Skiing.
Yeah, I want to do it. Like I want to be really good at it.
Have you skied before?
No.
No?
It's one. You said one if I had to.
Yeah. I mean,
it's
if
on
you-
my to-do. I'll do it soon.
For me, it's golf actually. Getting
Golf
rid of
was
the-
mine before, but
That's-
I've done it now.
Oh, really?
Yeah, so that's something I've learned. But I'm yet to improve, but golf I've sort of learned now.
Okay, if there was a time machine, okay, that allowed you to speak to yourself when you were 18, right? What is one piece of advice you would give yourself?
Oh, that's a tough one.
Considering now you've lived this journey, right?
Yeah, now I live this journey. I would say at 18, I would have told myself to work a little harder.
Acha.
To like at that point of time, I would say at 16 to 20, I would have told myself to work a little harder to the goal I wanted to get to.
In towards studying or otherwise?
Towards studying, I would say. Towards
Acha.
studying, I wasn't that focused on it, but that's what I would have done. Yeah.
But trust me,
it doesn't matter.
It doesn't
It
matter.
would have helped, yeah.
Last one. Give me a song that motivates you.
Nothing
Could be
actually.
Hindi. I mean, Hindi,
I
English.
listen to a lot of Punjabi, so we'll be
Oh yeah,
there.
Punjabi does.
Yeah.
AP Dillo, I guess.
Yeah, AP Dillo for sure. Song name is not coming to mind.
Okay, but anything
Right.
AP Dillo, I guess.
Yeah, anything AP Dillo.
Wonderful, fantastic conversation, Aditya. I
Absolutely,
really
yeah.
enjoyed it. I think I got to know you over the last couple of weeks as we researched your profile, and I thought it was very, very interesting the stuff you've done. I didn't even know there was a company called BookMyForex, right? Because I didn't travel much overseas during the 12 to 16 era, but it was very interesting what you had done. It's very interesting the kind of background you came from. Right, banking family, like you said, very few families have 2 banking licenses that they own over a lifetime. You know, there's been exits in that part of the business. There was exits in your own personal business, and then obviously debt to equity. Very, very unique story.
Yeah.
Definitely write a book at some point. Mention that it was recommended to you over here.
100%, yes.
But really enjoyed that. Any final parting thoughts for founders, funders?
No,
at
I
the
think for founders, it's just that keep going, right? I think execution is everything, and work hard, keep executing, and that's what I tell all founders. I'm happy to help whenever. I'm always there. This is one of my first. Actually, this is the first podcast I've done, and it's been an awesome experience. I've never done it before.
Wonderful.
Yeah. So it's.
What's the best way to reach out to you?
Super DM.
Super DM. There you go, guys. I think we might as well start funding Super DM and let's just organize some sort of a pre-series.
Actually, now I've done it. I'll go out and call the fund and be like, take my money.
And you know, like the best way to reach out Super DM. You're on LinkedIn.
I'm on
Your
LinkedIn.
Twitter handle is.
Twitter, I'm not that active.
Acha.
But it's all in Addy, I think.
Okay.
Yeah.
Wonderful. And again, I mean, what I take away from this episode, and I'll say this again, is that start with the end in mind. I think that we were getting to that. Like, you know, you had this ambition that I want to be here, and then I've decided all the steps and taken everything with that end goal in mind. You're definitely there, and I mean, at least you're the first.
That end, like, basically, don't think of it like a ladder. And what people do is they see this goal.
Yeah.
And they see like, oh, I got this.
Yeah.
Right. Let's say I would have said I got Amazon. It's not that, and get demotivated that I don't want this. But I said no. This is a step closer to there.
Correct.
So you have to take everything as a stepping stone. Yeah. Everything is an opportunity, and it doesn't mean that if it's not my dream goal, I'm not going to give my 100%. I'm going to still give my 150% at each journey going forward.
Because you don't know when things
It'll
are going to
come.
turn, right? Like
Yeah,
you never
yeah.
know how it meet your
The opportunity will come.
Yeah.
You prepare yourself for it.
Wonderful. Thank you so much, and really enjoyed the conversation, Aditya.
Absolutely.
Hopefully, in about 25-30 episodes, would love to come back and we'll talk about this all-in capital CCD at that time.
Yes, absolutely. We'll do it. Yeah, we'll do it. We'll take people through it as well.
Wonderful. Thanks
Awesome.
a lot.
Thank you. Thank you for having
Yeah.
me, man. Cheers.
Bye. Take care.
Cheers.